Welcome to the Stock Hacker Academy TV show on YouTube, TV, whatever. YouTube has replaced TV largely. And I'm Erwin, by the way.
I'm Joel.
Hi, Joel. Crazy times, eh?
I mean, today feels a little better.
Depends. Yeah, if you're a crypto investor, I don't know if it feels better.
No, no, it doesn't. I mean, it depends on what kind of crypto you're in. If you're in Bitcoin, you're not happy, but you're not as sad as people who are in Luna. But that's a topic for another time.
Yeah, definitely. We don't like talking about crack.
No,
So we're talking about how real estate investors left money on the table with stocks. I'm guilty of it.
could be painful topic, but let's get through it.
It's a painful topic but it's a learning lesson that I think everyone needs to know, and that's why we're discussing it today.
Mhm.
Because was it a bad idea to buy stocks back in 2008?
2008, maybe. I mean, but that would have been an interesting decision to make. But 2009, March 2009 is a different question.
Yeah, because I had going into 2008, I had a bunch of small cap stocks I was invested in that were recommended to me from a publication that was out there. They didn't do so well. And just for context, small cap means these are not big companies. They were rather smaller companies. One actually went to zero, um, and that was there's actually many lessons to unpack from those times. But again, I had one stock that went to zero. I had other stocks not do well, and I actually sold up. I sold them all my small cap stocks, and I held one. I held one. It's not doing well right now either. I've held it this whole time. It did really well. I probably should take my profits. But there's also many lessons from that time as well. And actually, we're talking about it here in relation to real estate as well, because we have many real estate investors who let's watch this show. I'm a real estate investor as well. Like Joel, anything you want to share on how like the market's compared, how the real estate market's compared to the stock market?
Yeah, so I think the biggest point is like there was just a lot of fear. Like 2008 hit, and I mean, you experienced that. I didn't, but anybody who was in stocks at that time or was looking at the stock market, it was just um, there's more fear than there was even now, and there's a lot of fear in the market right now. The stock market in a period of 17 months, I'll say the S&P 500, it's an index, the 500 biggest, most successful companies in the stock market in the United States. The S&P 500 fell 50%. It lost more than half of its value in a 17-month period of time. So for 17 months, people only watched their portfolios drop. That's scary. Like, what are you supposed to do, right? So a lot of people just sold and ran and swore off stocks forever. And at the same period, if you look at the historical prices, uh, if you look at historical real estate prices, and I particularly took a look at Toronto and Hamilton because that's where we invest. Toronto and Hamilton have had incredible appreciation, price appreciation since 2009. And you look at their prices between 2007 and 2009, when 2008, 2009, when the stock market was crashing, losing 50% of its value. You barely saw a blip in Canadian real estate, particularly Toronto and Hamilton. So of course, that looks way more attractive, way safer, way less stress than the stock market. So people started buying up real estate, yourself included, Erwin. So it wasn't a bad decision. Um, but what happened next, I think, and this was just like cold outsider perspective, looking purely at the numbers. The market bottomed out in March 2009 and started to pick up after that. And then from March 2000, I'm going to share my screen just to give you the visual, because I think this is a
Yes,
really
I love
powerful,
visuals.
yeah, this is a really powerful example of, first of all, timing, and second of all, always be learning, and the power of the stock market. Um, Pardon me as I pull this up. Okay, so here's March 2009. Here's where we are today after the several months of decline that we've already had. We've had between, it ranges between 15 and 20% decline depending on the week, depending on the day. Yesterday was really bad, today is better. 462% increase in value still to this day. So if someone had started buying even in, you know, April or May or June, to see all of this price appreciation, they would have been able to participate in that. Not to say it was a great ride the whole way through, like you see it plateaus and dips a little bit here, 2015, 2016, some trouble from November 2018 right through to February 2019. Obviously, COVID, but overall, long-term perspective, 462% appreciation. So what did Toronto? Yeah. So then what did Toronto real estate? Now Toronto, we know Toronto and Hamilton real estate have done really well. So what did they do? Unfortunately, I don't have a graphic for this. I just did the calculations. Maybe I'll actually, we'll edit it in after the fact. 277% price increase, which is still phenomenal, between 2009 and 2022. In Toronto, 278% price increase in Hamilton in that same period of time. So that's almost 190% more appreciation, more return on investment in the stock market than in real estate. Now, caveats, that doesn't include cash flow. And the second caveat I would say is, I think one of the really powerful things about real estate is that you can refinance. So Erwin, you've built an incredible portfolio because you've been able to leverage. You can't really do that with the stock market.
Correct. One could, but it's not the best idea to leverage stock, because I know people personally that have been what's called margin called. So they have taken on too much debt, and so their broker, who they folks use to buy and sell, the platform they use to buy and sell stocks, they're actually liquidating their positions almost at random because they've over leveraged. One could argue I've over leveraged my real estate. It is a double-edged sword. Not advice on how much leverage to use. Just my experience is, we're typically buying houses for 20% down. And where did that money come from? It came from existing properties in our portfolio that we got new mortgages on in order to afford down payments for new property. And that has been the magic that made real estate so great. Of course, real estate investing doesn't even matter if you're a passive real estate investor. I consider myself mostly passive. It's still considerably more active than being a stock investor. And I consider myself a holistic investor. I have friends who do not invest in any real estate and who've made many millions of dollars in stocks. So I'm open-minded to it, no different than I'm open-minded to pre-construction condos as an investment vehicle. I think there's a right investment for everyone. And then one of the great regrets I have many regrets. Not buying more real estate back in 2009, not buying more stocks in 2009. And the stock conversation, like I said, going into 2008, I had a lot of small caps that were likely low quality companies. Again, one went to zero. So if I'd focused on quality companies instead, they'd likely still be around. I'd still likely be collecting a dividend that's gone up. And then again, I want everyone to be open-minded to opportunities, because again, we have a friend who came on my podcast, Brian Zammit, who was literally retired 2 years after he retired. Him and his wife retired in 2010, 2011, thanks to all the dividend stocks they collected during that crash. So again, I think I did it all wrong. I was probably too invested in too risky of assets. And that's my takeaway from that crash. And that's my takeaway from this crash as well. A lot of the crappy companies that don't make money have been crashing quite badly, including certain cryptocurrencies. My focus going forward is I'm not doing anything right now. Joel and I were discussing before the recording started that we're basically sitting still, where we're going to wait for opportunity, and then maybe even start buying small amounts soon for long-term buy and hold purposes. And of course, we'll trade options as well to generate cash flow when things are a little bit more settled.
And I think another point I want to make too is that, so this is the top of the market in October 2007, and then things start to slip. Let's say you had a crystal ball and you knew that something was coming, so you bailed out and sold at the top, or pardon me, this example is actually, let's say you bought at the top of that market, or even maybe you bought somewhere in here, and you just held, like you just held on, and you weathered this. That's October 2007 to about, it covers about April 2013. Oh, it's 6 years. That's 157% increase. So real estate was a smart idea in that case. Nobody knew when the bottom was coming. So, but if knowing then what we know now, we know to watch for a bottom. So the point, like you were saying, we're getting ready to buy now, because if this is a bottom for us, or if we're going to see a bottom soon, I don't know, maybe we have more pain to endure. We don't know. We don't have a crystal ball. But when we see a bottom, and things start to actually plateau. So this is a monthly. I don't know if this is. I don't want to dive too deep into the weeds here. But essentially, what we're looking for is, we want a confirmation that things are starting to move up. So there we go. See, so for several weeks in a row, there were nice, and I apologize to anyone who's seeing these bars and have no idea what they mean. Each of these bars is 1 week. If it's a green bar, it was a good week. If it was a red bar, it was a bad week, relatively speaking. That's a really rough translation. But even if you waited until like May 2009, like, you're still capturing a lot of appreciation. You're still capturing prices at a great low, and it's a very confident thesis at that point. Nothing's confirmed, but it's a very confident thesis that the market is recovering. So that's what we're looking for. That's the opportunity we could be looking at right now, right? Like, we don't know when, but that's the opportunity we're looking for right now.
Yeah, we're in no hurry. It's rather than trying to catch a bottom, and I know lots of people who've been trying to catch bottoms, and the bottom keeps dropping.
Yeah. And real estate still looks pretty attractive, especially if the markets really are softening, and maybe you can't pick up a house or two, and then once the stock market bottoms, and if you have free cash, who knows?
That's exactly what we're planning to do. Cherry and I hope to buy at least one property this year, and I'd like to add to my long-term buy and hold stock portfolio. This isn't advice, but there's some really attractive valuations, like Disney, like Amazon's getting pretty cheap. Apple, I'm wearing my Apple Watch. I have tons of Apple, and I see a lot of stocks, I think, that are on discount, especially from peak. Apple's down, what, 20% from peak, more than that?
So I wouldn't be surprised. Yeah.
Looking for opportunity.
Yeah.
And so is now a good time, Joel?
I mean, I am personally, again, nobody has a crystal ball.
Nobody.
I'm personally still sitting on my hands. I've got cash ready, just in case. I'm okay with, like, I'm not trying to perfectly time that bottom. I'm okay with watching missing out on maybe a few weeks of recovery and appreciation before I am comfortable to start hopping in again, because I believe in the long term. I mean, well, you saw that chart, like, over the last 17 years. Is that no, that's the wrong number. 2009 to, it's like 13 years. Over the last 13 years, that's a lot of wealth created. So the long term, the long game wins, and that's what I'm banking on.
Mm-hmm. And again, we're also being cautious because good chance we're going to head into inflation. We may already started our process to fall into an inflation. So again, no hurry to try to catch falling knives.
Yeah,
this thing could be heading lower for all we know.
If past crashes are any indicator, the dot-com bubble was a full 2 years. 2008 recession was 17 months. So I mean, we've only had what, 3 months of this, well, actually, no, more than that now, maybe 5 months. So we're still in the first half of this, if this is a prolonged thing. So like you said, patience is key.
Patience is key. I may scratch an itch and just buy 1 share or 2 shares of some of these stocks, the cheaper ones. $100 of Disney stock won't break me, but,
Right.
but I won't be taking any large bites.
Yeah, and like what one of some of our coaches and mentors are saying, now could be time to start phasing in purchases, where you're not buying full out, but maybe 1/3 of the cash you're willing to invest, use 1/3 of it at a time, and see where it goes.
Right, and we're phasing in quality, and it's really handy that the coaches and mentors that we have that help teach our programs are self-made multimillionaires, and those are the people I want to learn from versus the people who are posting what's called lost porn on social media. I don't want to learn from them. I want to learn from the winners.
Yeah. I'll learn from their mistakes, but to see how people have survived, have weathered, and made money through downturns, the coaches that we have that are part of Stock Hacker Academy, I mean, I probably would have run away from the stock market by now if it weren't for them. So I'm really thankful for that community support, their support, and the overall community support too.
Yeah, same. I just wish I followed them more.
Oh,
I wouldn't
God.
know those blocks otherwise.
I know, same. Yeah, that's all from me.
All right, thank you, Joel. Thanks for everyone for tuning in. And then, Joel, what can people do if they want to learn more?
Yeah, so we have our Stock Hacker report that goes out every week. You can sign up for that. Now, the best way to sign up for that, we have, we're talking specifically to real estate investors today. And if you are a real estate investor who is now starting to investigate the stock market, or you've just started to get into stocks, we have a free report for you, how real estate investors are finding cash flow in the stock market. So you can sign up. There'll be a link in the description below. You can sign up for that. Click on that link, sign up to get that report completely free. It's Cherry, so Erwin's wife, her story of starting and failing in the stock market, turning to real estate, and then coming back and succeeding in the stock market. And it's stories from 4 other real estate investors and entrepreneurs who've done very similar things and how they are succeeding in the stock market right now. So, and that will get you the free report and the weekly Stock Hacker report as well.
Awesome, amazing. So thank you, Joel, and I want to wish everyone out there to stay safe,
both
health-wise and financially.
Go enjoy the sun.
Yeah, enjoy the sun, and be careful out there. There's lots of turbulence that's to be expected.
Absolutely. Thanks, Erwin.
All right, thanks, everyone.